Hey now. Happy fall, y'all. Cheers. Mm-mm. Water, water, water. I love water. How about you? Badger meter. I see somebody brought Badger meter up in the chat. I don't know. Yeah, they took a hit. Some stocks took a hit this week. It was looking really juicy. Yeah, there's one that I put a buy order in on and I didn't get it, but I probably will this week, and that will most likely be revealed on this short week. How about you? First off, it's going to be Thanksgiving weekend or week. I guess weekend. I don't know. Some people celebrate it the weekend maybe, but here in the United States. So, what do you guys do? I am going by my in-laws, and we are going to spend a few days there. So it's good times. And yeah, as far as the newsletter goes, some of you are having issues with the link to the Seeking Alpha article. I don't know what's up with that. I've had my wife try it. I've tried it. We will take the link and put it in an incognito window, and it works. So I don't know. There was somebody on Blossom. I posed the question there. D's divs. That's what I would say. The other D's. D's divs said they think that people are allowed only that they can read a few free articles a month. I don't know. I did contact Seeking Alpha support. Hey, they said that it took a while. They said you can gift 5 free articles. People can read them. Responded back, didn't hear it. But anyway, Michael, RHP, which I don't know. What is RHP? Yeah, and by the way, if you're new here, we'll do some news. We'll look up your stocks if you want to look up any. And again, unless it's something that I know quite a bit about, then we're going to just have to look at the fundamentals and see what some of the Seeking Alpha analysts will say about those. But Ryman Hospitality Properties, I've never, Properties, it's a REIT. Hotel and Resort REIT. Okay, interesting. I have not heard of that one. It looks like they do own the Grand Ole Opry and a lot of Nashville area attractions. Is that why you bought it? That's fantastic. I've not heard of that yet. So do share with us, Michael, in the chat, but also ESS, Vici, and CHH. Felt like ETF had too many overlaps. That's a good point, man. You have to look at those ETFs because I'll see people share their portfolios and they've got a ton of overlap. So yeah, let us, I'm going to show you guys something. I put Peter Lynch on the thumbnail because I want to show you guys something. And unless you call yourself out, I'm going to keep you anonymous, but something you said that I should have shared in the video about Aries Capital. Also with the newsletter, Pat, thank you. I did receive a few replies saying they don't like the new format. And it's funny because looking at the metrics on my end, there's far less unsubscribes and way more opens with this. So it's working. I do kind of miss sharing some of my thoughts, but for whatever reason, I don't know where I need to write that, but I do like writing. And remember, I told you guys where it says, if you want to learn about something, write about it. But the numbers are the numbers. The people have spoken. It looks like this is more in favor with people that are reading this newsletter that I do. So I'm going to keep that there for a minute. Hey, Steve, we can try, buddy. I can put the word out, but I think you do need a big enough podcast with a lot of connections, like the Compound and Friends, where I shared it. I enjoyed that. They had Peter Lynch on. That was great. But yeah, we may just be a little bit too small. Robert Schiller, you know what? That probably is a lot more doable than Peter Lynch, which I did. I'm almost done. I have like 7 pages left of that book. I've slowly been going through the one I shared on the last video. So I want to show you guys something with Aries Capital here after I say hello to Kevin. What's up, man? From Lakeland, Florida. Dude, it was so awesome. Kevin, he's been on a few YouTube videos for what he does. Keep helping. Dude, he helps keep the buses run on time. So what an awesome purpose, Kevin. I love that. All right. Oh, Vasco, what's up, man? I saw you on Blossom earlier. You were helping me with that. And then A lot of whiskey and cigars for them. Hey, you do you. You get through however you need to get through. And then Pat's going to go south. Okay, so I want to show you about, you know what, John? I'm going to encourage anyone in the chat to share what they know about Blue Owl, because all I know is a few things I've heard on some podcasts. I think their CEO said some things that weren't too reassuring from what I understand. So if anybody knows a little more, and John, we can definitely look up and see, like, get a little flavor of what they are saying on Seeking Alpha with that. So with that being said, I want to show you guys something because of a comment that was received. And we are going to start off here in the land of dividendchannel.com. If any of you go to dividendchannel.com, what you will see is the drip calendar. So I already have the drip. Okay, let me do this way. If you go to dividendchannel.com, it'll look like this. So we'll walk this through the beginning. Right here, right there in the middle where it says calculator. Some people say calculator, some people say calculator. Click on the calculator. And they give you the instructions. So for us, we're going to use Aries Capital, ARCC. We'll compare it to, I like to use VOO, or you can use SPY because you'll get the dividends reinvested there. But somebody said that since they IPO'd in 2004, the share price has been flat, and that's true. But we'll go back to November. Thank you so very much for the tea. I do appreciate that. All righty, bye-bye then. We'll go back to how about 2000? Let's get wild and crazy, everybody. We'll go back to 2004 instead of 2005. And then you hit chart 10K invested, and it will bring up a new tab, which I have to share that. So apparently the earliest start date, because of VOO. Let's hold on. Let me go back and let me use SPY, because that must be when VOO came out. Is that right? Did VOO come out in 2010? I wonder why it can't go any further back than that. Let's go back. I want to go back to this one then. Let's try SPY, because I know SPY has been around since the 90s. There we go. That works a little better. So we share this tab instead. So this window will pop up, and you get two different charts. It's a really handy tool. The first chart, I need to move myself there because I'm a little bit. Let's just give you the whole screen. Get myself off there. So you get two charts. The top one is growth of a fictional $10,000 with dividends reinvested. And then on the bottom is $10,000 growth without dividends reinvested. And look at the power of Aries Capital since 2004. Yes, the share price started out at $17. I know this is probably small for some of you. I'll talk it through or make it bigger here. The start one. There you go. The share price was $17.63 right around November this time in 2004. And the share price now, $19.84. So some people say, look, the share price has only moved up $2-ish a share. That's why I won't invest in that. But check that out. You would have received $33.72 in dividends. And if you drip that, you would have started with 567 shares and ended up with 4,966 shares. That's a total return of 885% for Aries Capital versus 714% for SPY, the S&P 500. Isn't that just mind-blowing? The share price moved to just over $2 a share in all those years since 2004. Your average annual total return with dividends reinvested was 11.5%, and it was 10.5% for the S&P 500. But if we look at without dividends reinvested, it's substantially different for both. And Aries, you can see, is 203% for an average annual total return of 5.4%, but 9.17% for the S&P 500. Why? Because obviously the tech boom has helped, but that's a nice handy little chart. You can do that for any stock. It's something I use often over at dividendchannel.com, and then you click on calculator. So yes, the share price moved $2 to you anonymous person, but you would have had $33 at least received in dividends, even if you didn't reinvest them. But obviously, reinvesting gives you more shares. And this is the whole theory of Stephen Bavaria's income factory and what he was saying. Why am I not on there? There I am. Oh my God, my heart skipped a beat. I'm like, oh no, it's a black screen. What did I do? So, okay. Anyway, that's cool. I like that little exercise there. And Bloss, I hope that was helpful for you guys to see the power of why you can't always just look at the stock price and what the stock price has done. Total return is so freaking important that you need to look at. And I will say pre-happy Thanksgiving, Lucas. So yeah, happy Thanksgiving. I love Thanksgiving. I love the food, the family, might have an adult beverage or two, and there's football on all day. For somebody like me that is a freaking football junkie, Jack, I could care less. I mean, that's maybe not fair. What's awesome is you can take advantage of it. If it's fear of the whole entire stock market, right? The worst case scenario, if we're at the twilight of civilization, then the stock market isn't going to matter anyway. So I had this thought. This was very important because there's investors, there's people investing now that maybe weren't paying attention to the market, or they lived through it. They might have been small children. I don't know when COVID crash happened, and it's possible somebody's 18 now. 5 years before, they might not have been paying attention, but my thought, and I remember I was watching Ian Lopik too. He was talking about things, but what he was buying, continued to buy. My thought, as I was buying McDonald's and various companies that were just crazily beaten down, if the stock market didn't recover, it's because there is a massive problem with society and possibly the collapse of society as we know it. So you're going to have way more problems than your portfolio, probably trying to find food and stay alive and not checking what your portfolio is doing. So if that happened, it wouldn't have mattered anyway. But the flip side, we would recover. Things would go back to normal eventually. We didn't know if it was going to be 6 months or 6 years, but eventually something would happen. There'd be a cure. We would go back to normal. So it would just be a fantastic time to buy. And that's always something you have to remember, is that the stock market's going to come back. And if it doesn't, then it doesn't matter anyway. So you might as well just keep buying. Josh, I don't know PEG. It sounds familiar. I feel like I should know PEG. We'll look up PEG. Vasco, you finally joined Snowball. What is Snowball? Oh, the dividend Snowball. I'm guessing that you're talking about. Oh, yeah, the machine. SBS. SBS and ATH, are those? I don't know if those are two. I'm excited about this stock. I want to tell you guys. Sam, thanks, man. And what's funny? I was over breakfast talking to my wife about this, and I said, so you'll know it because the next video. I was telling my wife how doing this video about something I came across in a book from Peter Lynch that he recommended in 1992. I mean, I still have it here. That he recommended in 1992, Peter Lynch's Beating the Street, and a stock that he said looked like a really good recommendation. It was one of his stock picks, and then it ended up being a big fraud. He obviously couldn't have known any of that, what was going to happen, but it happened. Investors lost a lot of money, but Ares Capital came in and bought the remnants of Allied Capital too. And anyway, the point being that I knew the video wasn't going to do well because it was so niche, but I had a good time in putting that together, learning about what happened. So the next one will be a, three cheap stocks to put on your radar or something to that effect. And you guys know the game, right? You know the game, the videos like that, because everybody wants to see, okay, what are the stocks? Even if you're not going to buy them, you want to know the names. So it's just the way of the nature of the beast. But thank you. And yeah, Sam, as far as Aries goes, we don't know what's going to happen, which is why for me, it's going to always be less than a 3% position of my overall portfolio because because exactly what happened with freaking Allied Capital. You have Peter Lynch, one of the great investors of our time, recommending this stock. And if you stayed invested in it, you were wiped out. Whatever you put in it, you lost, or you got a few cents on the dollar. So just because of that, that should show you that, right? Stocks are it's a fluid situation and things are always constantly changing. The only thing that you really don't have to pay attention to is, of course, buying an ETF. Like I will say just the S&P 500, because if you buy a semiconductor or a very specific niche ETF, things can obviously change. But yeah. So I asked if you guys had a quick thought about Blue Owl OBDC, and I didn't dive into it, so I'll plead ignorance and hope that we can come together as a community. I'll bring them up on Seeking Alpha and see what some of them. Yeah, X Turbos, SP5, Spy, and VU are the same, but it's when they came out. So when I like to do these comparisons on Dividend channel, they let us go back, what is that, 30 years to 1995. But the problem is I wanted to compare, but VOO, I guess, didn't start trading till 2010. That's going to be my guess because of the start date. So for the exercise, I had to use SPY because I know that came out in the early 90s, right? Mid 90s, something like that. But yeah, just to get back to that point, Charles, that they changed their mind because OBDC2 investors were going to lose a lot of money. Yeah, we'll see. And I'm sure I probably could have just asked AI to give you a summary. And that's the beautiful thing. They could just give you a reason on that. You bought RHP because of dividends and you're a big country fan. See, that's cool, Michael. That is something fun. As long as it's not and I don't know about RHP, which look like it has a lot of real estate in the Nashville area. But dude, I bought Portillo's hot dogs. I bought Portillo's hot dog stock because I love the food. I love getting a Polish from Portillo's. So it's my hometown stock. You got to buy Portillo's. Yeah, I put $1,200 in it. And, hey, there's plenty of people in Chicago that are getting their Portillo's while they're watching the Bears over there. Yeah, I don't know. They're in Wrigleyville by the Cubs Stadium. Definitely not down by Sox Park. So is it too early to break out my Chicago? And the funny thing is I actually have to think about how to do it, Higher risk equals high reward. Aries Capital, you're banking on the loans being paid back. S&P 500 is much safer. Absolutely. Two different beasts. With Aries Capital, though, like I shared in the video, 64% of their loans are first lien senior secured. So if that company they're making a loan to goes bankrupt, they are first in line when the liquidation event happens to get, hopefully, they won't get 100 cents on the dollar, right? But they will get a significant chunk back before anybody else. So I think that's very important. But yeah, the S&P 500, to me, it's two completely different animals. But yes, I agree with you. Accent Enterprise needs to declare dividend. I've never looked into them. I know they do Taser, right? And I do remember hearing about them a while ago. So, hey, somebody share if you think. But I don't know if they're done growing, if they have a lot of cash sitting around that they don't know what to do with and they don't want to buy back shares, then maybe they could. But that's the problem, though. Once that dividend starts being paid, people are going to expect the dividend to keep being paid. So, good question. My average cost on Zoetis and Nike. Well, hey, I will say this. If anything, I hope you learn a lesson that, again, nobody knows what's going to happen. And my conviction for it could change. It could change, but I'm looking at the fundamentals. And I think with any stock, you're looking at the story. You're looking at earnings. And if earnings are going to go up, and the story that's going, I guess the story that's going to make those go up, like what is the reason? So, yeah, I'll show you those real quick. I'll tell you what, why don't we do news while I'm over there first? And is anyone buying Clorox stock? I'm not buying Clorox stock, but I did own it. I thought it was overvalued and I didn't see a lot of growth. But you know what? I'm sure I can show you. I'll show you why I probably wouldn't keep buying it right now. All right, let me answer your question. Was that LTL? LTL 5275. Not picking on your name, but it's funny. As somebody that uses their government name to do this, there's been times that people will just, from behind the anonymity of their avatar and somebody like that, I won't let somebody make me feel bad because it's like, hey, LTL 5275 said I'm a big dumb idiot. It's like, okay, that's cool. Thank you for sharing your thoughts and opinions, but not saying you, although you could be some truth to that. All right, let's look that up. Enough of this jabber jawing. So I hope you guys like that drip returns calculator. Do you ever use the drip returns calculator? Not a, but the. There we go. Yeah, we were looking at Ryman Hospitality Properties, or I was looking at it. All right, here we go. Let me give you more room here. I don't know. I never do. I say I'm going to figure this out someday if I could make this the default layout when I go off the screen, but hey. All right, what am I doing here? This is what I'm doing. We were going to look at, oh, you wanted to know my cost basis. So this is the combined port. This is not everything. This does not include my wife's Roth, my 401k, my HSA, things like that. So this is just Schwab, which is linked to good old Simply Safe. And you wanted to know Zoetis, and Nike. Yeah, brutal. Here we go. So Nike is currently cost basis of $74.94, and we are down 16%. And then on Zoetis, which has gotten killed, I think it's been a bit of an overreaction. $153, we're down 20%. And these are the things that you're seeing in real time. You have to be able to, and a lot of the great investors say, when you buy a stock, you have to be ready for it to go down 20, 30, 40%. There's times Berkshire has dropped 60, 70% in the past, but because Warren was so into the business and knew it like the back of his hand, he was not worried, just kept holding and buying more. But I want to look up a few of these for you. I want to do news because some of you just probably come for the news. So I usually have this set up. Let me go back to where we were. Oh, yeah. Perrigo. We started with Perrigo, or stopped with Perrigo, which is the company that makes white label products. When you go to Walgreens and you buy the Walgreens brand Tylenol, this is the company that makes that. They make the pharmaceutical and then they slap whatever company contracted them's name on there. So International Paper, ticker IP, got a dividend downgrade from Simply Safe Dividends from 60 to 50. You would think we'd need paper. Yeah, container board and corrugated boxes. Merck raised that dividend 4.9%. When I was watching a little football earlier, I saw a commercial for Keytruda, which is, I believe, right there. You could just read the screen, buddy. 50% of sales. So I know some of you have been buying Merck. McCormick, loved this one, tweeted it out, or not tweeted, blossomed it out, that they make or they own Cholula. They bought Cholula 2020 for 800 some million dollars. One of my favorite hot sauces. They raised their dividend 6.7%. Woohoo! MPW, Medical Properties Trust, raise that dividend. This is my old punching bag, the old standby. Raise their dividend. It was a token raise. It was a penny per share, I think, per quarter, or 4 cents, right? Over the course of a year. But you could see they are not buying it. Simply Safe still give them a very unsafe. Here you go. I saw a comment about Comcast. So they got a dividend downgrade because, and you know what, for you, pause the video. We're just going to skim through this. I'm not going to read it, but you can pause the video to read that. This may help answer some of your questions. This is why I love Simply Safe, but basically they're a cash generator, but broadband competition is intensifying. And they're trying to defend the broadcast. But I'm scrolling and reading here, okay? They're trying to defend the broadband business. And their additions have turned negative. That is yucky. And that's one of the reasons I sold Nexstar. As much as I love the management and what they've done, their internet customer base is shrinking modestly. But it's a very real trend. So you can pause the video and read some more of this if you want. And this is just, yes, Simply Safe is a little expensive, but it is very helpful when things happen, because this is all that Brian Bollinger and his team, Matt DeLeon, do. They go through, this is their lives, is they keep Simply Safe humming and giving it their own take on it. And it's a very, very useful resource. Now, maybe if you have $1,000 portfolio, it might not be for you, but what was this? Their cash flow payout ratio. They can still pay it. I think it's just the company's growth model. And anyway, there you go. Do with that what you will. They refreshed their outlook on AbbVie. We won't stick around on these too long. Could be overvalued. You know, my story with AbbVie, I wish to God Almighty I could go back in time and not have listened to people on StockTwits telling me that when they acquired Allergan, that it was going to be very bad for the company. So I listened. That's on me. People told me that the company was going to struggle and it was going to hurt them. But Brown-Forman Distiller raised that dividend 2%. I don't remember who they own. Yeah, all of them struggling, except Bud. I don't think Bud is. I'm too long on these. Nike, there you go. I know I mentioned this. Raised their dividend 2.5%. We got $4 extra. Not happy to see the token increase. I was hoping for a little bit more, but hey, it's reasonably valued at this price down here. It's because of the earnings. EverSource, they got a dividend downgrade. Somebody asked about ES. Oh, they tried to sell a company, sell part of their business. Looks like it was blocked. Don't know anything about that. And then lastly, AbbVie or Abbott. AbbVie came out of Abbott. Check that out. They got a dividend downgrade because they are buying Exact Sciences. And I think from what I read, doesn't this have the hope you're not eating colorectal? Yeah, Cologuard. So it's a at-home colon cancer check, because some people don't like going to the doctor and having a team of people come in. And anyway, so there's that. And I don't know if I can get through. I'll come back in a second here. Let's see. John wanted OBDC. Josh was PEG, Public Services Enterprise Group. It's a utility. Looks like it's reasonably valued. So there's that, Josh. 99 very safe. I'm not going to look through their financials, man, because it's just, I'm going to get back to talking with you guys. So if it's a 99 very safe, take their word for it. SPS, I don't know about this. It's Sao Paulo. Don't you love this? Does anyone know why this happens? Why when certain names, it doesn't translate? The computer can't figure that out. This is sanitation services in Sao Paulo state in Brazil. Unrated. Don't know anything about that, but let's see real quick. Okay, it's in Brazilian reals. So this probably has some FX, I guess. No, I guess it wouldn't, because the amount is in the Brazilian real. So they cut the dividend at times. It's all over the place, man. Looks very cyclical. And yeah, it's a utility, so earnings payout ratio is what we use there. But it could be interesting. I don't know enough about it. Nice to see their net debt coming down, but yeah, as for me on that, maybe we'll see what the people at, and I don't know if this is the other one you're talking about, ATH. So I don't even know what is this financial services company in the US. I don't know. This is a weird one, dude. Is that preferreds 635? I don't know what that is. 1,006. I don't know if that's a preferred or what, but. And then lastly, CLX. I wanted to show you why. I think with Clorox, it was their revenue. Wow. Yeah, they got crushed. Look at that. Yeesh, almost a 5% yield. They still have a 70 safe. They've gotten a few downgrades in 23, they got a dividend downgrade. But let's see. Slow dividend growth. So not buying it for dividend growth. They will be a dividend king in a couple of years. Yeah, just kind of giving token dividend raises. They think based on the dividend, 5-year trailing dividend yield, it's undervalued. But what if we do PE? But if we switch this to price to earnings, it also looks undervalued. But with anything, it's all about the future. Yes, this looks very attractive that it's at a 52-week low. The PE is way below the 5-year average. The dividend yield is way above the 5-year average. That looks good, but buckets of yuck here. And this is, I think, why I sold. I want to say it was 22. Is I stuck to my guns when that payout ratio, free cash flow went over 100%. I got out. We had not a large position, but yes, it's creeping up. Way too high is their free cash flow payout ratio. And if you're new, just jumping on, I love the free cash flow payout ratio because free cash flow is the lifeblood of the business. I think with free cash flow, you can pay a dividend. You can buy back shares. You can do things like mergers, acquisitions. You can carry the free cash as cash on the balance sheet, right? There's a lot of different things that you can do with the free cash flow. It is so critical. And the dividend comes from free cash flow. You pay people cash from the free cash flow. That's why I love the free cash flow payout ratio. You don't give people earnings. Like I don't have earnings in my Schwab account when a company pays a dividend. No, it's cash from the free cash flow. That's why I like free cash flow when looking at the sustainability of the dividend. And I kind of tried to say that on the Dividend Guy podcast. Okay, a lot of time here. I want to come back to you guys, but free cash flow per share is declining. And I don't like that. Sales growth, it's gone negative, but look at this with Clorox. Their total sales 10 years ago were 5.6 billion. They're at 6.8 billion the last 12 months. That's no bueno. I mean, it did increase, but it's been flat and slightly declining since 2021. I don't like it. Okay, they still have some good margins. This would be great for a retiree, but I mean, the net debt, 96% of their capital structure is debt. All debt is going to have to be paid back eventually. They still do have a good interest coverage ratio. And if somebody's new here, remember, with interest coverage ratio, it tells us how many dollars of operating income, also known as EBIT, earnings before interest and taxes, does a company have to pay every $1 of interest on the debt? Remember, you legally have to pay the interest on the debt. It's non-negotiable. If you can't pay the interest on the debt, bankruptcy is going to happen. So companies will cut the dividend, obviously, before they default on debt payments. So $11.20 of operating income to cover pretty easily every $1 of interest on the debt. So that's kind of good, but it's just flattish like a radish. And Let me see real quick just to see what couple of you what SBS. I'm like SBA. Let's see what they go. Yeah, there you go. So you have a good one here because the quant and the Wall Street analysts say that the utilities company in Brazil is a buy, a lot of buy, strong buys. The quant gives it a strong buy. I would have to learn more about that. I've never been to Brazil. I know very little about Brazil, but for whatever that's worth, so a lot of the analysts like it. Josh, for your peg, analysts give it a sell. Wall Street says a buy, and the Seeking Alpha Quant says that it is a hold. And there you go. You pause it, look at a couple of those explanations why they say. And then last, Clorox. I'm sure it's going to say probably, yeah, hold. Oops, wrong one. I went back, trying to maximize it for you. Yeah, hold. I think this would be great for people that are living off dividends. I think it's always going to be there, but if you're expecting growth, okay, we'll see. Hold, sell, buy. So the Seeking Alpha analysts are all over. And just because I saw this ranked in industry, let's see. The only strong buy of the quant is Reckitt Benckiser Group, ticker RBGLY. All right. Hey, and while we're here, extra bonus before I come back to you guys, how about we look at here, talk stops. The top stop. The top stocks by Seeking Alpha. This is going to be helpful to somebody, right? This is the quant. Their proprietary quant. Make that a little bigger. The quant rating ranked almost the perfect score of 5 for Micron. Very interesting. And DeFi Development Corp, ticker DFDV. Now we could put in screeners and look for ones that just pay dividends or what, but if anybody wants to pause this, look for some ideas. And Galaxy Digital on there. For whatever reason, Merck, there you go, Merck's on there. The quant from Seeking Alpha thinks that these are all strong buy stocks. And I don't see any. There, Bluebird is the last one. Mr. Bluebird, not going to sing that. All right, stop sharing. Hello, there you go. So let me take a sip of this. Cheers, Slancha. What's up, Adam? Nice video, man. Comparing Amazon to a department store. I like that. Yeah, so I guess that's the thing with Comcast. And again, why I sold Nexstar is that they are a melting ice cube. Might be a slowly melting ice cube, but they're losing subscribers. It's just the nature of the beast. And again, nothing that they did wrong. And I equated it a lot of times to if you're a horse and buggy manufacturer and I don't know, pick a 1901, probably doing pretty good and thinking life is good. If you were the most well-run horse and buggy manufacturer, automobile comes along, the whole world wants automobiles and you're out of a job. So Ryder Systems, we talked about them once before. Wow, that's crazy. And you know what? They did cut the dividend back then, but they quickly reinstated it not too much longer after things started to recover. So that could be something to watch out for and why it, again, helps to know what you own. And probably it was scary times. I was around, again, I was investing maybe 1% of my pre-tax dollars into my 401k and that was it. But hey, I was still young. I'm still young. I'm only 47. Sam, that was 2 of us, and I love it. I love reading books, and niche I could capitalize on. It really could be, and I guess I'll just have to keep going to the used bookstore and looking for these old financial books. But yeah, in this book, dude, I've done that a lot of times. I've done a lot of times where he recommends something, and I'll be like, "Oh, what happened to that?" Kind of like Pier 1 Imports. Shout out if you remember Pier 1 Imports. That was a store he was buying in 1992. I think ARK is well, I've never dug deep into OBDC, but Korean Cardboard KC. Thinking of adding positions in United Health, Snap-on, and Goldman Sachs. Probably all solid. UNH is one that I'm going to stay away from it. I think we'll be changing. All right. I'm kind of going quick here because I want to get caught up. So my thoughts on Publix saying they are a brokerage for stocks, not sports gambling. So not Robinhood, essentially. Publix. No, because as far as I know, Publix is a super grocery store. So do you mean public, right? That's funny, Adam. I had said that if it went to $4, I would do one more tranche of 100 shares. It's $400, right? So yeah, we got 200 shares, average $6. So we're $1,200 in, and I enjoy it, man. I enjoy driving around, driving by a Portillo's, and seeing what people are in line, what's going on, what's moving, what's shaking. Telling my people at work too, put the bugs in their ear because, hey, whatever. I've told them you should pack lunches, make your lunch, you save a whole bunch of money. But the people that are in the office at my company, the guys out in the trucks, right? They don't do that. They buy lunch every day. So if they're going to do it, you say you got to go to Portillo's. You get the Portillo Perks app. It's brand new. They got deals on there. Check it out. So I'm kind of like pushing them, you know. Which Dan? I didn't see him. Is that Dan Weston? Oh, I use it constantly, Josh. I mean, it is great, but there's a way to use it. The way not to use it is when people say, write a 5-page blog post on 5 dividend stocks to buy. Boom, put my name on it, publish. That's not the way to use it. But when I use it to put it this way, Josh. I have an idea. There's something specific I want to know about or something specific I'm looking for. And I will tell it to look for this thing. And sometimes, like I love Claude by Anthropic, sometimes it'll read 40 or 50 articles in the span of 2 to 3 minutes, and it will pull out and summarize everything that I'm looking for and give me links. It'll make a statement and it'll have a link to the article that it pulled that from so I can verify. Dude, there's no way I'm reading 50 articles in the span in less than 5 minutes. You know what I mean? So I don't know if I'm not saying like you're a Luddite or Luddite or something, but dude, there is a way to use it, and I use it every single day. It's really just become something that I use constantly. But again, as I tell my kids, I use it to help me understand. And you can hear how I speak on things. AI has taught me a lot, and I verify that it is correct because it can hallucinate. But there's a way to learn it where you can work with it as an assistant and a researcher and something to help you learn and understand things. But as far as a done for you, like packaged bow, put my name on it, I'll never do that. So I guess that's my little thing. Josh, come on, man. You didn't have to do that, buddy, but thank you. I'm telling you guys, give your freaking money to somebody else. There's somebody out there in the world that needs it much more than I do. Trust me. This is my hobby. It's a labor of love. I really do enjoy talking and rambling on with all of you people. ODFL has been on the list. It's still on the list. Buying Zoe. I was going to buy a little bit more too, but I didn't. And I'm getting caught up to you. Love it. Clark's is tempting with nearly 5% yield. And it's probably not looking discounted because of where it's at with revenue, right? That's one of the big things. Companies need growing revenue, right? If their revenue is flat, it can be good because if they can keep maintain that flat revenue and just throw off lots of cash. Warren and Charlie talked about not shying away from companies like that. But if you're looking for a growing dividend and a growing company and a growing stock price and the revenue is flat, there's only so much management can do with a flat amount of revenue coming in the door. If sales aren't growing, how are they going to grow the dividend and grow the business over time? But better quality blue chip staples like Procter & Gamble, Johnson & Johnson, Coca-Cola, PepsiCo, Hershey, and Merck, I would agree so. PepsiCo might be a little tapped out. I know they're trying to grow. Merck, that's going to be iffy because I think Keytruda hits that patent cliff in 2028 or 7. I think it's 8. We'll see. Maybe they can get an extension on the exclusivity. I don't know. Oh, dude, I thought you said you bought 100 Bitcoin 5 months ago. I was like, well, Jesus, William. Hey, we all have that. Oh yeah, that's right. Simply Safe, they did do one, right? Florida too. Yeah, this is the joke I made about Simply Safe, where all you have to do is give them an email address and you get 2 free weeks. So I said, I guess if you could just come up with, 20 some whatever, 21 email addresses, a year, you can just keep using it. But obviously it won't track, it won't track everything for you. But yeah, you're welcome for that, Sam. Some of them look good. Trading is only going to keep picking up, right? Jack, they've been on my radar. Yeah. NASDAQ is the one that I think I have on my watch list, but again, it's all going to be about movement, volume. That's why they say Wall Street hates when investors sit on their hands and just buy. Wall Street loves it when there's buying and selling and options and all kinds of things that zero D to E options. Dude, Wall Street loves that. So as long as that's going to keep happening, then yeah, that should be good. Exact Sciences is the poop in a bucket and send it to us via UPS company. Love it, William. Very, very well said, and I hope nobody's eating. Tux Cat, are you my friend from Blossom? I will take it. I will say thank you so very much for that $1.99. But again, broken record here. Somebody needs that $1.99 out there in the world much more than I do. This is my hobby. We're going to be okay. And I have not optimized my channel and my content strategy for extreme growth, which maybe I should have, but I must have missed what that was for, Adam. But yeah, Reckitt Benckiser makes Lysol, and I thought it makes... I got to look. There was a joke about that, but I think they make Trojan. Yeah, Durex. So Reckitt Benckiser has Intimate Wellness, Durex, and Mucinex. What else we got here? Oh, Airborne. That's right. We take Airborne. We got Airborne and disinfectant products, Lysol. So yes, you were correct. They were founded in 1819. So Reckitt Benckiser has Lysol and Durex. I will commit that to memory. 2 very important products in our society. Now, if you want to use those at the same time, hey, you might want to be safe there. You could try. I don't know what kind of weird stuff people are into, but hey, hunting pinners. Now, Ares Capital is not. They are required by law to pass through 90% of their profits to the shareholders. So it is not a qualified dividend. And that is why I hold the bulk of it in my tax advantaged accounts. But yeah, that's what happens when we inhale tea. I wouldn't recommend trying to put tea in your lungs. Doesn't work so well. Yeah. Hey, up there, if you're listening, God, it's me, Russ. Next time you go ahead and build people's, don't put the breathing tube and the feeding tube in the same spot because we're not so bright down here. And some of us try and put tea into the breathing tube when it should go in the feeding tube. So maybe just saying, I know I'm not as smart as you up there, but maybe just separate next time your feeding tube and your breathing tube. Have them two distinct and separate places opposite each other. You could have saved a lot of people like that. Thank you. Carry on, sir. Josh is having a bush. I may or may not be having a Guinness afterward. All right, a Korean cardboard is down. I'm sorry, I forgot that, man. I should keep everybody's avatar associated with their names. I'm so sorry. What happened to Dan? Is his channel gone? Did he stop missing it? And I will say, Josh, somebody run this through AI and let me know. I believe, and I got this from Ian, and I wanted to ask him about it, and I forgot till right now. I believe when he says I bought a tranche of stock, it's incorrect because I think tranche only, I think it only applies to, I think it's bonds. I'd love for someone to look that up, but I don't think it's accurate to say you bought a tranche of stocks, but I think it is only to do with bonds maybe. Deez, what's up? Thank you. Used AI for resumes. It is crazy. Those graphics you see on the videos, you have no idea how much time that has saved me when I put all my information into a script and I try and condense it into something that's low mental calories. So, people like me can understand it easily and not get confused. When I want to read it, instead of putting up B-roll or something like that, there people are going to forget. I've been having AI make those little one-screen explainers for me, and I think they work out pretty well. That's good to know, but it's still not where it was still growing so slowly, and that's part of the problem with companies like them. They are... Mondelez, I know Kevin's got me on it now. I think he says Mondelez, right? I say Mondelez because L-E-Z looks like Les to me. But I think we're always going to have people that want sweet treats. Just what's the volume? Let's look at Mondelez. You know what? I'm almost caught up in the comments here, and we're going to look at Mondelez for you because I want to see now. And Pat, no, I love hearing it because you are in a different spot than a lot of us. You are in the wealth preservation stage. Myself, I'm in the wealth generation, wealth accumulation. So yeah, for you want those, right? Correct me if I'm wrong, Pat, but you're looking for safety and reliability of dividends over growth of dividends or growth of stock price or total return, if I hear you right. ODFL, I think their revenues took a hit, I think. Yeah, but Josh, I love talking to you guys. I was at a surprise birthday party for my friend's brother's girlfriend. Okay, if you can follow that. And nobody will talk stocks there. Nobody, people could care less. My family's not really that interested. So I've made that mistake with so many companies, including NVIDIA. 2021-ish, I think the end of 2021, NVIDIA was starting to get really talked about and hyped up. And I looked at it and just said that dividend yield is way too small. And just like, should have bought some, but but that's everybody. Hey, if I've lost a lot of gains by not buying something because I thought the dividend yield was too small. So there he is, Kevin. Here he is, everybody. He's here. Like Santa. He's here. You see the attraction for clocks, but don't understand the secret sauce. Competitive advantage, trash bags, bleach, and ranch dressing. Yeah, and the funny thing too is that I was reading that a lot of companies or a lot of consumers are starting to buy more of the private label brands. They're trading down for the up and up, right? At Target or the great what is it? The blue, I can see it, the Walmart private label or the Walmart private brand or yeah, private brand, right? That's what it's called. The Walmart brand. Great value, is it? It's great value, right? Yeah, so I don't know. To me, trash bag's a trash bag. The hell with it. I'd tell my wife, we don't need the Clorox garbage bags for a premium price. Buy the Walmart brand, buy the Amazon Basics brand, whatever. So yeah, you're right. And Aldi, almost all of Aldi's products are their own. And I like them just fine. Sometimes it's hit or miss. Okay. But that's good, Josh. Uh, I've seen it wrong on a lot of stuff. There was times when I first started using it that I tried to get in a hurry, and one of them, it made it to when I was recording that I used some of the information for my script, and then I was recording and it said, I don't know what stock I had on there, but and Nexstar Media, I'm reading. And Nexstar Media, which is a dividend king, and I was like, wait, what? It's a dividend king? Yeah, Charles, that's you know what? Hey, there's a 9-year-old inside of all of us, right? You buy store brand trash bags, but somebody Clorox's bags are the best selling. And that's for everybody to decide, right? Because I guess if you're taking the garbage out and the bag keeps ripping and the Clorox one doesn't do that. But yeah, a lot of people might not know what Kevin was talking about, that Clorox owns Kingsford Charcoal. They own Fresh Step, I believe, Fresh Step cat litter. They own Hidden Valley, the Hidden Valley brand. I'd like some of your guys' thoughts on nursing home REITs and stocks. I know they're not all created equal. We're going to need it. And I know everybody talks about the silver tsunami that's coming or here, but people are working longer. People are living longer. They're healthier. So hey, Fast Eddie, thank you. Yeah, I asked you guys to look up about tranches because I know people say, and I started doing it. I'm buying a tranche of Zoetis. I'm buying a tranche of Portillo's, but it says there's slices of financial products like bonds and mortgages. That's what I thought. It's nitpicking. It sounds good. I love it. It sounds fancy as hell. Sounds fancy as all get out to say a tranche, right? Said I bought some Zoetis, right? You could say, I bought a tranche of Zoetis. People are like, wow, he is very sophisticated because he bought a tranche. But, well, there you go, Pat. Looks like you found the holy grail. UTG also has 5.3% dividend growth. So, and I could be wrong too. I'm just having some fun, but somebody call up Ian next time you're watching an Ian Lopik video. Everyone just start nitpicking him when he says tranche. I'll research it. I should find that out. I want to know now. I don't know. There it is. And you know what's funny? I need a tagline because I remember don't get mad, get glad, right? We'll have to see. By God, we're going to find that out right now before we get out of here. I'm going to put up tranche. I won't have to bring you with. Here, tranche. Nope, not trance music. Just gonna start playing trance music. Okay, you're right. A tranche is a portion of something, especially money. Here, I'll ask, this is Gemini, is it accurate to say I bought a tranche of Zoetis stock? Survey says, okay, AI says, yes, it is accurate to say you bought a tranche of Zoetis stock, as it's a term used to describe a portion or a single installment of an investment. However, for most individual investors, it's more common and clear to simply say you bought shares or a stake in a stock. So I may have been wrong here. Common language, while technically correct, and I think one of you just said that. Anyway, it's overthinking it, and this is the problem. This is what I said. It is. Ooh, Zoetta Sabai from the Motley Fool. 3 things investors should know from a month ago. I didn't see that. I'm gonna have to look. But anyway, yeah, it's nitpicking, and this is a problem with sometimes nitpicking. Don't lose the pay attention to what the person said they bought a tranche of instead of the freaking use of the word tranche, right? And LTC is a retirement REIT. I will tell you. Oh, here you go. You know what we're going to do before I get out of here? I'll give you guys a slight little tranche of cupcakes. Dude, I love it. I want to show you guys. We're going to do this. We're going to use the power of seeking alpha before we go to. I just had a thought. Yeah, I just had a thought. You said retirement REIT. Oh, hold on. LTC. LTC properties. Let me make this bigger for you. What I wanted to do, because they will show. Here we go. You see the quant ranking right here. Sector real estate, industry, healthcare REITs. In the sector, it's ranked 11 out of 172 and 3 out of 17. And this was for strong buy. Whoever threw LTC on there you go. The quant gives it a strong buy. A lot of the analysts give it a strong buy. But if we click ranked in industry, there you go. The top healthcare REIT stocks is going to show us that the number one strong buy is Omega Healthcare Investors, ticker OHI. National Health is 2, LTC. There you go. CareTrade. Where's MPW? No MPW. Oh, there it is. It's at the. There's MPW. We found it. There's Alexandria, but there's only one red. There's only one that's a sell, and that is Medical Properties Trust. So, oh well. Buy MPW at your own risk. So, well, Club Russ, there ain't none of that. This guy's taking the next couple hours off, and that's my Sunday night. So, oh, Frank, what's up, Frank? Yeah, it's been a minute, man. Good to see you. I appreciate that. And we'll send cupcakes your way, Pat. Don't you worry about that. But don't worry about that, Pat. So I thank all of you again, seriously, for stopping by, hanging out. I have fun. I look forward to this every Sunday night. It's quite honestly the easiest content that I do, and it is the absolute most fun. Editing videos by yourself sometimes, not so much, but I appreciate it. So, but yeah, I do. Thanks, Josh. Thanks, Jay's. Let's go MPW. Well, I'll watch from the sidelines as you own MPW, my man. So appreciate that. And hey, everybody else, I hope to see you next week. Have a fantastic Thanksgiving. Remember, as I shared in the newsletter, some of the lessons of 80s, 90s, and 100-year-olds at the end of their life from Dr. Carl Pillar, who was on the Mel Robbins podcast, said, nobody, not one person said, I wish I hustled more and earned money. The thing that is the most valuable to these people at the end of their lives, or when they're in that age, is their experiences and their family/friends. Their relationships and experiences are way more important than money or things. So let's enjoy and have some experiences and relationships this Thanksgiving. And Jay, bring it up next time, man. I have thoughts about that guy stuff. I'm about to get off here with tokenizing, and save it for next week if you can remember. Write it down on a piece of paper, save it, and I'm going to get out of here. So love you guys, and I'll see you later.